Partner, Dr. Kobna Situ, our assurance partner, Mrs. Charlotte Forson Abbey, the financial services industry leader, Hayford Kuma, Mr. Hayford Kuma, he's the head of Fintech Overseas leader. To kickstart the session today, we'll take introductory remarks from our country managing partner, Mr. Daniel Owusu.
Okay, good morning, Doctors, and good morning, distinguished guests and participants who have joined us. It is my great pleasure to welcome you to today's session. Doctors, can you confirm if you can hear me okay?
Yes, please.
Okay, thank you. Intersection of rapid technological innovation and evolving regulatory landscape, an exciting yet complex frontier for the financial service sector in Ghana. The fintech industry, as you know, has been a catalyst for transformation and reshaping how individuals and businesses interact with financial products and services, from mobile banking to digital payments to blockchain and artificial intelligence. Fintechs continue to lead and drive efficiency, inclusion, and accessibility across the globe. However, with these advancements come new challenges, particularly in the area of regulation, data privacy, cybersecurity, and consumer protection. Regulators and industry players must strike a delicate balance between fostering innovation and ensuring the stability and integrity of the financial system. And today, we turn our attention to a significant development in the digital currency space. And if you have followed, you would have heard that the Bank of Ghana plans to introduce the ECD, which is the Ghana Central Bank digital currency. The ECD represents a bold step towards a cashless society, promising to enhance financial inclusion, streamline transactions, and support the digital economy. Yet, its implementation raises important questions about regulatory framework, interoperability, and the broader impact on the financial ecosystem. As we explore these themes, I encourage you all to engage actively, share your insights, and consider the opportunities and responsibilities that lies ahead of all of us. Together, let's chart a path towards a resilient, innovative, and inclusive financial future. I just want to say thank you to everyone for sparing this time to join this important webinar, and I look forward to a stimulating and productive discussion. Thank you very much, and let me hand over back to you, Dorcas, to continue. Thank you.
Thank you, sir. And thank you so much for that insightful introduction. I believe that participants today are excited to learn more about the future trend of the fintech industry, the trend, and then the regulatory challenges as well. At this juncture, we'll be diving into our topic, which is and also allowing our panel to take over. So I'll pivot to Mr. Kuma to give us an overview of the fintech industry in Ghana.
Yeah, good morning, everyone.
Good morning, sir.
Good morning. I think I can hear you very well. Thank you.
Okay, thank you very much. I'm just going to share a short presentation covering the topic. Guess my screen is live now. Just going to presentation mode.
Yes, yes.
All right, excellent. Okay. So thank you for inviting us to participate in this session, and congrats to Deloitte for organizing this program. In the next few minutes, we'll just run through Ghana's fintech industry landscape, the trends, regulatory challenges, and then the future outlook. All right. So we'll trace Ghana's fintech ecosystem um, all the way normally to 2003, because that's when we had the Payment Systems Act. But remember, that did not include services, because at the time we're just dealing with the wholesale version of the payment system. But in 2009, which is where we normally want to trace this to, do on the regulatory side of things, there was a guideline in 2008 called the Branchless Banking Guidelines that actually enabled the birth of mobile money. But mobile money came into being in 2009 with, I think we all know, MTN mobile money. And then the central bank, through a hand-holding approach and an open mindset, enabled the regulations that empowered mobile money, culminating in 2015 to the issue of what we call the Electronic Money Issuers and Agent Guidelines, which provided some initiatives that enabled the growth of mobile money. So, for instance, you had the definition of the principal-agent relationship between the mobile money company and their agents, as well as the okay. I'm informed my slide is not in presentation mode. Let me just see if I can correct that. So it's a slide in presentation mode now.
Yes, it's showing now. Thank you.
Oh, excellent. Thank you, Enoch. So that enabled the growth of mobile money. We had the agent and principal relationship being properly defined. And in addition to that, we also had the tiering of merchants, tiering of service users, and things like that. And then 2018, extraordinarily, we had interoperability happening across the value chain of the payment system. So I think GIFs used to have eSwitch, and then they had GIFs. They had the GIB, Ghana Interbank System, connecting the various banks. And then in 2018, they were able to first have mobile money interoperability, connecting all the mobile money companies, what we properly call DEMIs now, dedicated electronic money issuers. And then that was also integrated into the GIFS architecture, where they already had the eSwitch network, the banking network, and then now the mobile money interoperability network. So we now have a complete interoperable financial system. 2019, we sought to consolidate all the gains that we had made. Various acts, various guidelines had been issued, various notices and directions provided, but all of this was consolidated into the payment systems, this time along with Services Act, because at this stage you had the service providers also in focus, not just um, the payment system as a wholesale service. And then 2020, Bank of Ghana took a strategic move and established the Fintech and Innovation Office separate from its payment systems department, so fintechs could have a dedicated focus. All of these have been undergirded by certain policy initiatives or a certain policy mindset. So I've listed the three documents. You see National Inclusion and Development Strategy, Digital Financial Services Policy, as well as the Towards a Cash Light Agenda. All that these documents have a common focus, which is financial inclusion, and then they also recognize the role that fintechs can play in driving this financial inclusion. So with the coming into effects of the fintech ecosystem, basically, we see a number of channels through which transactions happen in different forms of transactions. So I don't think this is quite comprehensive, but we do have inward international remittance. We have digital payments, We have KYC, CDD services. That's know your customer and customer due diligence services being provided by fintechs as a service. Then there's the core payment processing. Then we also have credit scoring, predictive analytics, where the models are no longer focused on only ability to pay, but also intent to pay, leveraging all forms of data points, including how you purchase data or airtime, and the various transaction footprints that you have within the digital economy. Then there's merchant aggregation, which provides the services for merchants to basically collect payments from all platforms that the customer may be using. We have domestic money transfer, which is very known to us. That's basically the peer-to-peer service that we use to send money across to various people within the country. Now, there have been some key and some interesting areas of innovation, I should say. So the core service is payments and transaction processing. But along with this, we have seen fintechs developing in partnership with other players within the ecosystem who have the necessary authorizations, savings products where people can actually save using their mobile money accounts. We have insurance products. I'm sure you are aware of certain companies that have been advertising. They even have a monthly insurance package, so you don't have to pay for a whole year if you don't have the funds. And we have pensions, which has been a very good initiative because we have a number of people within the informal sector who are able to use these services and will probably not have been benefiting from pensions if it were not for the opportunity to just be able to provide for their future using the phone. Of course, we are very much informed about the credits that we receive. Let me just highlight that there's a distinction between the form of credit you have now and what we seek to achieve in an updated, in a new guideline that I'll be speaking about later. So currently the credit that is on the phones is a tripartite arrangement. There is a bank because it's only a deposit. It's only an institution that's licensed to offer credits that can provide these credit services even on the phone. So there is either a bank, a savings, a loan behind the product, and then there is the alternative credit scorer, and then there is the disburser, which is normally the mobile money platforms. This next one is quite an interesting one, the pay-as-you-go leasing models. We have certain companies that have provided key livelihood enablements within our rural communities, especially. Talk of electricity, communities where there is no electricity. Someone goes, sets up a solar farm and is producing electricity for people to use on a pay-as-you-go basis. So they pay daily or weekly based on the subscription model. And then the fintechs enable them to collect. Collecting these kinds of funds where people are paying 1 cedi, 5 cedi on a daily basis would have been quite difficult, but for the fintechs. So this has been a very interesting initiative that we are glad to ensure it remains running, even when we are penalizing or we are taking actions against the fintechs who are collecting for these firms. You always have to identify these key innovations that are in livelihood enablers and permit for those services to still be offered even as you take action on a particular fintech, because we are aware of investments. The enablers within this ecosystem, because the fintechs, then we have GIPS. I've spoken about interoperability. They also introduced the QR code, GHQR code, which is quite an innovative product, enabling sort of payment aggregation for the consumer, for merchants. It doesn't matter whether what you have is a bank account or a mobile money account. You'll be able to collect from all wallets and all accounts within the ecosystem. Then, of course, the mobile money ecosystem, digital address system has provided an enablement for CDD processes along with the national ID. And all of this is carried on the telecommunications infrastructure. So, of course, we cannot leave them out. License categories, there are 6 of them. I wouldn't run through all of them, but just to say that depending on the services that one seeks to provide, we have a license category for providing technology services like credit scoring, software development, key software development like fraud management and things like that. Then we have payment service provider in 3 categories: standard, medium, enhanced. We use a risk proportionate approach and an innovation mindset in developing our guidelines. And so we are minded on the need for stability and safety, but we are also minded on the need to allow the young people within the ecosystem who want to provide some of these services to be able to also grow and scale. And so the standard category, for instance, is only reserved for Ghanaians. There is no capital requirements. They are not required to be ISO 27001 certified and things like that. But what happens is that you are grandfathered or you are carried on the back of an enhanced service provider who will see to ensuring that the transactions that are passing through you, because there will be those connecting and assessing the payment system, they would ensure that all these safety checks are conducted on your transactions. Medium is just an enhanced form of the standard license, which enables some additional services. Then we have the enhanced payment service provider who is actually able to connect to the payments gateway and offer services. They are required to be ISO 27001 certified along with most of our other regulations. We have 2 other categories: payment service provider scheme. It's normally supposed to be for switching services for payment card processors who don't want to use GIPS, because I'll speak about a guideline later on that we have to protect transactions emanating from Ghana. Finally, is the electronic money issuer, dedicated electronic money issuer, dedicated in bracket because there's also opportunity for banks to come for this license. They would have been electronic money issuers. But in the case of a fintech that's separated or that has the sole business of electronic money, we call this firm a dedicated electronic money issuer. You know 3 of them very well: Mobile Money Limited, which most people call MTN Mobile Money, Telecel, and then AT Money. But there are 2 others, ZPay and G Money. They are not telecommunications native. And so the regulations allows for dedicated electronic money issuer licenses to be issued, whether you are a telco or not. All right, this is how our ecosystem is looking currently. We have the enhanced category that I spoke about being 70%. Of the total number within the ecosystem currently is 63. You have of that number, you have 70% of them being enhanced license holders. 12% are the financial technology service provider. Dedicated electronic money issuers, 8%, as I've mentioned, 5 in number. Medium is also 8%, and then the standard, people don't normally like coming for the standard. When you meet young people, they don't have capital, they can't put all these systems in place. You encourage them to come for a standard license, but they want to, their focus is on the enhanced category. So standard thing, we have just 2 licenses at the moment. All right. As at end of June 2025, the total transaction volumes that we see, the transaction volumes that we see for the quarter ended June, 735 million. In terms of value, 323 billion. And then the float is, you can say the total balance of mobile money wallets is 28.9 billion. All right. In terms of accounts, we had 24.5 million accounts being active. And then, on the side of customers and on the side of agents, you had 423,000 agents being active, enabling the ecosystem. May proceed to regulatory development. So as I said, there has been an evolution of regulations. We had the Payments Systems Act in 2003. We had branchless banking guidelines in 2008. we had electronic money issuers guidelines, electronic money issuers and agents guidelines in 2015. Now, in 2019, when we consolidated into Act 987, which is the Payment Systems and Services Act, is basically founded on three key pillars: the oversight of the Bank of Ghana, the need for financial stability, and then the centrality of payment to enhance financial inclusion or extend financial services to the lowest levels of society. All right. So generally, the Bank of Ghana seeks to create an enabling regulatory and supervisory environment for these non-bank entities so that they can participate within the payments ecosystem, but without compromising on the trust and safety that we have worked for all these years. All right. In terms of other policy interventions, I've mentioned the merchant categorization. So you recognize that there are different degrees of businesses within Ghana. There's a carpenter who basically just has a workshop. There are businesses where they've actually registered, and then there are other small scale. I mean, if you look at the Ghana Employment Agency's categorization of SMEs, you have the micro being less than 10, and then you have the small being less than 30. 30 to 100 is medium, and then 100 plus, you have that being a large corporation. So in recognizing that not all businesses will be able to have a full set of documentation when it comes to business registration, we issued this merchant categorization guideline that allowed a certain amount of transactions or limits based on the level of KYC that a merchant has. All right. Then we have the sandbox, which is well known within the industry, enabling us to learn about new innovations and also affording innovators whose products or innovations our framework currently doesn't cover to be able to showcase this to us so we can also evolve our framework. We have enabled the provision of inward money transfer by providing guidelines for inward remittance services for payment service providers. So today, people receive their remittances straight into their wallets. Central bank digital currency is still ongoing. We have guidelines for dormant accounts. Dormant accounts don't just exist within the banks, it also exists on the wallet side. And then I was talking about the scheme category. So we have guidelines for domestic card processing, which we issued so that if you have been issued with a MasterCard or a Visa card by a bank in Ghana, and you are buying items from a shop in Ghana using that card to pay, we are saying that it is not fair on the Ghanaian consumer for these funds to be converted to euro for processing in France and then back to Ghana cedi before it hits the merchant, so that the customer is losing on both ends a translation cost. And so we have required that these processing should be done within Ghana and straight in Ghana cedis. And so we provided that license category, but GIFS is also able to provide these services, and almost all the global scheme services that we have are leveraging on GIFS to provide that, to comply with this guideline. We have some of the initiatives still in progress. Corporate governance guidelines, we issued this for the fintechs in June this year. It becomes effective from 1st January next year. Digital credit service provider guidelines, we've issued this to clean up the digital credit space. Just like we did for the payment service providers, their innovation preceded regulation, but at the point you would have to issue this to ensure to continue the use case, because the use case has been established. People are falling victim to this unregulated credit providers because they need the funds. And so it's been issued. We began accepting applications for licenses from this month. Virtual Asset Service Providers Bill, we've issued documentation on the status of this. We are we in regulations, you have a wait and you have do nothing, then a wait and see, and then you either choose to regulate or an outright ban. Ghana had been through the phase of a wait and see, and now has made a decision to regulate. And so the bill is currently before Parliament, undergoing the various processes to translate into an act. Open banking, which will seek to democratize consumers' information across the various financial platforms, is also ongoing. The ECD, we've published the report on the pilot that we did, and efforts are ongoing for the introduction of the ECD, and we'll be getting some more news and updates on this in the coming year. Now, let me end with a few views on the compliance challenges that we see for fintechs, even as we see the Ghanaian ecosystem growing. One is obviously, to be able to enter the ecosystem, you need to be licensed and approved. So we have institutions who seek to operate without being licensed. And then we also have licensed institutions that seek to operate that seek to provide unapproved products. Because although you have a broad category called permissible activities, we have the requirement to approve the various products that they offer. Regulatory reporting, and it's good it's being organized by an audit firm. Regulatory reporting is one key challenge for fintechs, because these are natively innovators who are now entering a regulatory space. And so it takes some of them some time to even understand why the regulator has all of these reporting requirements, not recognizing the need for the regulator to also ensure the safety and soundness of the ecosystem. Then anti-money laundering and countering the financing of terrorism and proliferation of illegal weapons. The management of this process, because of the speed of transactions, because of the sometimes pseudonymity of, for instance, the crypto space. These risks, the AML risk is heightened. And so in a similar manner, the effort that the regulator puts into ensuring that adequate measures are put in place is also strengthened. Data privacy and cybersecurity, of course, being digitally technology-driven, these are key risks that they have to deal with, and regulator has put in place key requirements for this that they need to comply with. But let me just highlight that we are innovation-minded as well, which is why I said, for instance, for the standard and medium license category, they are not required to be ISO 27001 certified or have these robust infrastructures in place necessarily. You will be grandfathered by an enhanced payment service provider who would have this in place. Third-party risks, talk of agents, talk of vendors and other third parties that connect to the various platforms and provide various services. It's a key risk once you're a technology business. Because of the evolving nature and emerging nature of this space, you are aware, for instance, that the Ministry of Communications is coming out with emerging technologies bill. So once it's emerging, once it's evolving, regulations will also seek to be evolving. So keeping up with evolving regulations. And then capital requirements. So we don't have minimum paid-up capital, but for the fintechs, we have what we call integrity capital, which is basically some amounts that they keep with the central bank for market conduct purposes. And then for the data credit service provider category, for instance, you are supposed to come in with capital because you'll be lending on your own balance sheet. These financing needs are also a challenge for some institutions. So this is where I would end for today, and then we'll look forward to engaging further during the questions time. Thank you.
Thank you very much, Mr. Hayford Kuma, for the detailed presentation. I've learned a lot in the presentation. We've noted some of the regulatory initiatives and policy interventions that Bank of Ghana has put in place. as well as some of the compliance challenges that some of these companies are likely to face or even facing already. We would I would encourage our guest participants to put their questions in the chat box, and then we'll pick them as and when we are done with the presentations. I will then invite Mr. Oyeniran Oluwole, our guest speaker from Deloitte, Nigeria, to give us a perspective from Nigeria. Thank you.
Hello, can you hear me clearly?
Yes,
Yes.
please, we can hear you.
So, good morning, everyone. It's a pleasure to be here. Quite excited to hear about the developments in Ghana. So, I'm here to just briefly give an overview of where fintech is in the Nigerian space and some of the challenges that it's currently facing. Later on, we'll talk about the future, but for now, let's look at the past and the present. Now, a brief overview that shows us the state of fintech essentially says, and the data goes to back it up, that Nigeria has become Africa's foremost fintech center. There's been swift growth in startups, investments, lots and lots of money has come into Nigeria, investments from the type of companies like Stripe, who have bought into Paystack and so on, essentially boosting the sector within the country. So lots of innovation has come in, and even traditional banks are waking up to the challenge and creating digital banking and even fintech arms to try to operate better in this current digital market. Mobile device adoption has continued to grow. Internet has become more, has proliferated a lot more. So digital payments, being the leader in the fintech space, continues to be the leader, and it continues to grow. We even have contactless cards now. Lots of things have happened in this space. Lending is the second in the market. The third in the market after wallets. So payments first, wallets then lending become like the top areas. But more and more, we're seeing conversations around AI in the space. Now, what are the key insights we can draw about this? Just to recap a few of the things I've already said, Nigeria hosts currently about 400 or more fintech startups, and that is about a third of all the fintech companies in Africa. It's been that ratio for a while now, since 2022, 23. About a third of fintechs in Africa are in Nigeria. So Nigeria is quite dominant in this space. And one of the reasons, of course, is the population of the country. So it's a key factor in the growth of fintechs. So it's a viable market for micro digital services, which tend to be provided through fintechs in terms of payments of small values, high volume payments, and so on. So there's been rapid innovation in this space, huge amounts of growth in financial inclusion enabled by fintechs and other platforms that are enabling them. And the regulation has been growing. Prior to a few years ago, the fintech definition was quite vague, and there was no uniform regulation for it. But there are now some clusters of regulation that we can identify are tied to various categories of fintech. And the direction has been positive in terms of enabling the operation of fintechs in this space. We'll talk a bit more about that, but it hasn't always been positive. But for example, there was a crypto ban about 4 years ago, but those positions have since been reversed, and a lot more positivity in the space in Nigeria today. So just a few highlights. The top 5 fintechs on the continent are in Nigeria. Quite a few of the major players are here listed. You can see them: Flutterwave, Paystack, InterSwitch, all of them, with the exception of Paystack at about $200 million valuation, and Kuda about 500 million. All of them are $1 billion plus valuations, with the daddy of them all, if I'm going to use that term, being Flutterwave at about 3 billion, OPay is about 2 billion, and the oldest fintech in Nigeria is InterSwitch. They are currently about 23 years old. They've evolved significantly over the years, and they're over $1 billion valuation. In fact, they are the first unicorn in the fintech space, on the continent. So InterSwitch has done quite a lot in blazing the trail. The ratio remains about 32-33% of fintechs in Nigeria to Africa. This is a 2023 statistic. but even today, it still remains the same ratio. And we're essentially looking at quite a huge volume of transactions. We're talking of $2 trillion plus value of transactions processed in 2024. 2025 data is still being validated, but bottom line, total value of payments going through fintechs has been quite significant. Almost like 70% has happened through fintechs, either in partnership with banks or via fintech. So it's quite huge, and lots of money has gone in. Almost $1.5 billion funding has come into fintechs in this space. So now, what's the current landscape? Digital payments, again, is the father of all of the transactions here. It's about 35 to 40% of the market is digital payments, but they have been broadening service scope. And looking at the history, a lot of fintechs evolved as enablers of agency banking, whereby not everyone has digital devices, but agents are able to provide technology to the underserved across the various regions of the market. One of the biggest manifestations of agency banking today is the POS service. So basically, we have a whole bunch of providers who have point-of-sale machines out in the open public spaces, and they provide cash collection, cash withdrawal, and even transfer services using POS devices, within the market space. Of course, at a very nice, profitable fee for those providing those services. Mobile banking has also been one of the earlier trends. Then digital lending came on board over and above the payments that we have seen in the past, using some basic AI technology to enable risk assessments and disbursements, and then using pattern tracking and behavior to increase progressively lending limits over time. Wealth tech has been a bit more of a recent development, actually do investments directly via fintechs, and some are even providing rates that are significantly beat inflation. Inflation currently being about 16% plus in the market, and some are even able to provide you 19, 20, 22%, 23% returns on your investments, which is not very, very bad, considering the fact that they are entirely digital providers. InsurTech is emerging, and then there's a whole bunch of activity around cryptocurrency. But overall, when you combine payments, digital wallets, and lending, that comes to about almost 80% of the fintech markets in Nigeria. The rest 20 is now shared among the insurtechs, the wealth techs, crypto, and so on and so forth. So big players have entered. Telcos are also in the play now via our payment service bank licenses provided to telcos, mobile providers like MTN and Airtel have gone into the space. So we have a Momo PSB, we have Smart Cash PSB. I understand the Momo PSB operates across the entire continent. They're also there with you in Ghana, and they were giving specific license for payment services combined with their inherent telco services. So the idea was to try and mimic, M-Pesa, but Nigeria's whole framework around fintech grew differently from the one in Kenya, where it was telco-led. Here in Nigeria, it was actually led directly out of financial services and digital platforms. Blockchain is also growing, and crypto adoption is growing as well. So that's what we've seen as far as the developments in this space so far. Now, what's the environmental regulatory perspective, which I'm sure is important to a lot of people on this discussion today. Now, the CBN is the apex regulator for financial services within Nigeria, but we also find that there are some key regulations driven across the SEC, Securities and Exchange Commission, and even our National Information Technology Development Agency. So the CBN is looking mainly in terms of banks, payment service providers, mobile money operators, and open banking, which has also become a policy that has been approved and is operational within the market, and then digital currencies. What SEC covers is areas around the capital market. So you talk of things like crowdfunding, crypto assets, any provider of investment type products and solutions in fintech space, they are all SEC regulated. And then NIDA looks at things like innovation, data privacy, basically all the things that need to be protected from a technology perspective, seeing that fintechs by definition are tech-led financial services providers. So the green on this slide shows the positive direction of regulation, a lot more innovation friendly, a lot more fintech friendly, There has been more things enabling fintechs. For example, looking at some of the notable regulations, open banking in 2021 was introduced to enable data sharing across financial service providers, be it banks to fintechs, banks to each other, or fintechs to each other. There's a whole framework around that using API technology to enable service consumption across various providers. Payment service banks in 2022 was introduced, whereby non-bank entities like telcos could offer banking services in the mobile space. Cryptocurrency in 2021 as well, there was a ban, but in 2022, there was a new framework from SEC around digital assets, and there's now, provisional licenses in 2023 to enable cryptocurrency and digital asset use. Definitely, I would say like a reversal over a period of just 2 years in direction around crypto, which is quite positive in the market, seeing that Nigeria tends to be a leader globally in use of crypto assets and currency. Then KYC regulations have been strengthened. So things like anti-money laundering activities, the whole KYC framework across a period of several years has been introduced to enforce stricter ID requirements. So all banking accounts, whether they operate in traditional banks or in fintechs, operate in Nigeria, all must be linked to national identity documents. So the possibility of a transaction going through a fintech with a named account not being identified to a person is virtually zero within this particular market today. So all of these help boost confidence, in the space and adoption of fintechs as well. So again, regulation is going positively, and the effects are being seen clearly in the market, with investments continuing to come, even though not as much as it was in a few years back, but it's not exactly zero now. There's still confidence within the space in Nigeria, and regulators giving positive signals that Nigeria is open for business and investments in fintech. Now, what are the key challenges, which is where I would want to essentially wrap up this discussion. Infrastructure, power is a challenge. But one thing that we've seen happen is that the fintechs have largely built their technology on the cloud. A lot have gone to either AWS, Huawei, and other players of that nature to help boost their infrastructure. But we still have local infrastructure limitations where, for example, power becomes a problem for people who are operating POS devices. They need to be recharged. Even the consumers of these services need to have power to be able to use them. So there's huge challenges around power, which also enables or challenges the access to the internet, which is a fundamental element of using fintech services. Cybersecurity is also an issue that has been raised. We do have a few players that have gone have gone very far in enabling cybersecurity protections in their platforms, that even go as far as using biometric identification, face identification, gesture identification to protect you and other consumers of fintech services. But still, the hackers are not sleeping. They've seen the size of this space, so they are concentrating on it, and any lapses in fintech providers are quickly exploited and utilized. But it's not like cybersecurity is only facing them. Traditional banks continue to get hacked every day, and there are insurance protections for those type of things. However, the larger a market, the more attractive it is for hackers. The work they do is tedious, so the higher the return they can get, the more they invest into those things. Talent is a challenge. There was a huge drain of skilled resources out of the country, popularly known as the jackpot syndrome, affected all tech-enabled providers, be it banks, telcos, and especially fintechs. So trying to hire the right skills to maintain the services in the fintech space remains a challenge, but Nigeria is rising to that, with providers of tech-based training and certifications proliferating within the market and trying to enable growth. Strength of the country is our population. So the key thing for us is to enable that population and to be deployed with the right skills to help bridge the gap, but it still remains a challenge. And then funding has decreased. It's not as much as it was before, but we are seeing a lot of the local fintechs, not looking for local investments, even more than foreign investments, FDI, as was the case in the past. Not growing as fast, but still growing. And looking at the fact that the number of fintechs doubled in the last 3 years is evidence that the market is still extremely active and growing. So how do we approach this? There's infrastructure upgrades. We were involved in helping draft the national broadband plan. We've also were involved in helping draft the national cloud strategy for the country. That is Deloitte as a firm. And all of these things are coming together to help enable boosting the consumption of infrastructure in a way that will enable development within the Nigerian space. Boosting funding, there's a lot of activity around that, even backed by regulation. There are frameworks in place, such as the Startup Investment Seed Fund, that have been put in place to help, boost investments in this space of startups, which are largely fintechs. And the CBN has also operated fintech-friendly credits. So they're able to provide some facilities to enable them to operate, helping to boost their investment. Strengthening security and trust is a big thing. What's happened is that our digital identity infrastructure, which is currently represented by our national identity number, is being upgraded and is being enhanced to become a lot stronger in terms of the securities it provides and how it provides verification services to the identity of those who use the services. So fintechs are able to rely more and more on this to help authenticate those who are engaging with, dealing with them, and operating in their space. So I would say, in terms of innovation in the market, fintechs are providing head over shoulders innovation around not just payment systems, but other services that they provide. I mean, earlier I was thinking, why is everyone going into payments? What more can be done? But there are still huge developments that have operated in this space. For example, now you can use a Nigerian fintech platform to pay in local currency for transactions on foreign platforms. They've gotten that level of integration in place, and the fintech makes everything seamless, and transparent. There are app-based payments on websites now, so you don't have to enter your credit card or your debit card information anymore. You can use tokens via fintech platforms. I've actually used a fintech solution here in Nigeria for something I've never been able to do before, where I sent a transaction to a wrong account. Via the fintech platform, I was able to flag it, ask for the money, and it was a wrong account in a different bank. Ask for the money to be returned, explain the situation, and within 24 hours, the money was back in my account. I didn't have to go to any branch or any bank. I didn't have to do, I did not, I just tried it to see if it would work. It actually worked. So they are really, really enabling a lot of innovative services in the space. But I think the biggest thing that fintechs have helped us with is financial inclusion, being able to provide low-cost services at a very high volume. Almost every artisan in the country today has an account with very specific fintech, be it a plumber, a welder, a mechanic. You can guess, do you have an account? This account, yes, they do. And you're able to do transactions with them, transfers to them, payments to them at no charge whatsoever, seamless, quick, and tech-enabled. So it's really driven a lot of adoption. POS devices are also being given out by some fintechs free of charge to enable that space. So honestly, fintech has grown, continues to grow. It's like exponential at this point in terms of the developments, and it's only positive developments that we expect to see going forward. So that, in essence, is my presentation, and I look forward to seeing your questions in the comments. Thank you very much.
Thank you very much, sir, for the detailed perspective from our neighboring people, Nigeria. And as we move together, we hope that we get to think together and see some of the developments from the perspective shared from Nigeria. We see that with the growth that has been experienced, there has also been an increase in regulation to protect the public interest and investment within the space. We also see that policy interventions has also been targeted at achieving compliance with AML laws and regulations and even anti-terrorism financing. It looks like it's getting more interesting. So Deloitte recently had a survey which focused on banks and even the fintechs as well. So we'll invite Mrs. Charlotte Forsenabe to give us a brief overview of the survey. And we will quickly also move to the Q&As. Please feel free to put in your questions. I think we have about 3 if we can have more, and then we can address them accordingly. Thank you. Over to you, Mrs. Charlotte Forson Abbey.
Thank you very much, Dorcas, and good morning once again to everyone. I hope I can be heard. Yeah, so I think that the results of the survey actually re-echoes everything that has been shared so far this morning, right from Daniel's opening remarks to Mr. Hayford's overview, and then that's the regulator's perspective, and to what Wole shared with us from Nigeria. So I'll just look at a summary of what we got from our survey, and that's the Deloitte Ghana Banking Survey 2025. And then there are about 5 thematic areas which I will speak to briefly. So in terms of expansion, what we see is that the fintech companies in Ghana continue to expand rapidly. And I think it's mainly driven by the fact that there's increasing smartphone penetration and the fact that we have a very useful tech-savvy population. So it keeps going up. It doesn't look like it's ever going to come down anytime soon, and soon, and it shouldn't actually. And we also see that there's a lot of collaboration between the traditional banks and then the fintechs, and this is to enhance digital offerings, to streamline payments, and then to improve upon the customer experience. So that's also came out clearly from the survey. And then in terms of mobile money dominance, we see that the mobile money platforms remain the most significant fintech innovation. So mobile money platforms are still reigning. There are record transactions. The volumes are so high, especially in the rural and unbanked communities. So yes, I know the banks have tried, the mainline banks have tried getting to these rural and local communities and unbanked communities, but what the mainline banks have not been able to do, the fintechs are taking significant steps in doing it. So that's on the fintech growth and market penetration. The second thematic area is on the regulatory environment, and we've seen that both in Ghana and Nigeria, regulation is really, really ongoing. So the Bank of Ghana has maintained a very strong proactive stance in terms of issuing guidelines for digital financial services, the payment systems, and then the cyber security. There are also sandbox initiatives which have encouraged innovation while ensuring that risks are managed, and then the fintechs have the opportunity to test their new products under regulatory supervision. So that's under the regulatory environment, what we picked up from the survey. The third thematic area was on key trends and innovations. And under that, we have digital lending and then blockchain and crypto. So under digital lending, we've seen a significant growth in digital lending platforms. They are offering micro loans, SME finances with simplified onboarding and credit scoring, using alternative data that is available. So that is also a way of reaching to, especially the rural and the unbanked areas. Some people there would never have maybe taken a facility from a mainline bank. But in terms of with the innovation of the fintechs, we see a growth in that. And then there's also a lot of interest generated in the blockchain solutions for payments and remittances. These are rising. But of course, the regulatory uncertainty still remains around the cryptocurrencies. I think it's still evolving. And I believe that we are going to see a lot more regulation in relation to that, as we have seen Nigeria already in the lead with that. The fourth area that came out strongly from the survey was on the challenges. And I think the challenges are not so different from what Wole shared with us. So for example, the first one has to do with cybersecurity risks. There's increased digital activity, and this has heightened the risk of cyber threats, prompting banks and fintechs to really invest in robust security measures. You can't do things and follow business as usual. These cyber threats and risks, they will pull you down. So that's one of the key challenges that the survey highlighted. The second one has to do with the financial inclusion gaps. So what the survey threw out was that in spite of the fact that there is a lot of progress in this space, there are still gaps in financial literacy and access, particularly among the older and the rural populations. So it means that there's still a lot more that can be done in terms of the rural communities and the unbanked communities. There are quite a number of people, even in the major cities and towns, who are still not using mainline banking or interested in that. So even though a lot of progress has been made, we still have a lot to do in terms of financial literacy, that is educating the populace, making them know what all this entails so that more people can get on board and even access to that as well. And I think that the third major challenge that we saw from the survey was that even though a lot of effort has been made to improve the interoperability between banks and fintechs and the mobile money operators, there are still a lot of technical and commercial challenges. These technical and commercial challenges persist. And so it means that the fintechs, the banks, and all stakeholders really have to do a lot more investment to ensure that the interoperability effort is not in vain and that it will keep getting better from time to time. I think the last thematic area has to do with the outlook. So what does the future hold in terms of the fintechs? And these have already been emphasized. The few points I have already been emphasized by our speakers so far. So there seems to be that continued collaboration. So the future points to deeper collaboration between the banks and the fintechs. And so over here too, we mentioned open banking and the API-driven ecosystems on the horizon. So it means that more collaboration will continue. We haven't seen anything yet. There's more yet to come. And then the customer-centric innovation. So focus will remain on customer-centric solutions. The customers are the people we need to drive these things, to grow these things. So there will still be a focus on solutions that will be relevant to the customers, leveraging data analytics, AI, and machine learning to personalize these services. We also saw something on sustainable finance. So fintechs are expected to play a growing role in driving sustainable finance and supporting Ghana's broader financial inclusion agenda. So there's still a lot more to be done, a lot more to be covered. We haven't reached anywhere. So the survey, this information, as I said, was mainly from the results of the Deloitte 2025 banking survey, and then the Bank of Ghana reports and other industry news and FinTech Association updates. Dorcas, I'm done. Thank you.
Thank you, Mrs. Forson Abe, for taking us through the survey. We've noted some key highlights, and I'm sure the participants have questions that they would want to ask. So looking at the Q&As, currently we have 5 questions that 3 have been answered already. I don't think we want to go through the answered ones, so I will start with the open ones. So we have a question from Mr. Kwame Asumenin Anan, and this is to Mr. Hayford Kuma. I think you have a lot of questions. They are asking, how closely is Ghana's regulations aligned with Nigeria? Are there any plans for harmonization frameworks? Being neighbors and ECOWAS free movement creates exposure for members of both countries to experience the fintech ecosystem. If harmonization is not in place, you find immigration of risk from one environment to the other. So he would want to know Mr. Hayford Kuma's perspective on that.
Great. Thank you, Dorcas, and thanks, Kwame, for the question. I think you are helping me to highlight one of our ongoing initiatives that I didn't touch on. Okay. Let me begin with your direct question. How closely aligned are Ghana's regulation with Nigeria's? There are a number of areas of alignment from what Oyeniran presented, but let me say that one clear area of divergence is the way we position the mobile money service provider. So in Nigeria, if you watch Oyeniran's presentation, he mentioned that MTN had become a payment systems bank. So they position the mobile money player as a bank, a payment systems bank. In our case, they are a dedicated electronic money issuer that needs to partner with banks to provide the service. But then in policy development, there is a lot of index research as well as other country contexts that are considered before we finalize policies. I mean, that's what every regulator across the world does. So where there are initiatives from Nigeria that you won't learn from the incorporate. Other initiatives from Ghana, they want to learn from the incorporate. Now, for turning to the question about harmonization. So one of our ongoing developments is the license passporting framework, which we currently have with Rwanda, and other countries are also trying to partner and join in that work stream. But what that seeks to achieve is that I'm a fintech, I want to expand to other countries. So currently, if you're a fintech in Ghana, you want to expand into Rwanda, your regulatory pack with us here becomes a starting point in Rwanda. And because the requirements are such that you have about 80% of the requirements being exactly the same, when you go to Rwanda, then you'll be required to meet just about 20%, and then you'll be able to get your license. So your regulatory package, as well as how compliant you have been as an institution, that information is shared across, and we recognize each other's efforts in this case. So Rwandan fintech can come into Ghana a bit easier. The same way Ghanaian fintech can enter Rwanda a bit easier, and that's something we are hoping will go across with other countries. Why we adopted this approach is the challenges with harmonization. In the EU, for instance, where you have a single market already clearly established, they have the Payment Systems Directive 2, basically providing a license passport where once you are licensed in one country within the EU, if you go into another, you're able to go into another country seamlessly. In our case, the harmonization hasn't happened as had been foreseen by our founding fathers, right? So you have ECOWAS, even within ECOWAS, there is WAEM, and then there is West African Monetary Zone, which is the English-speaking side. So the AFCFTA, for instance, as there is PAPS, and the Continental Free Trade Area is also, the AFCFTA is also coming up with, they've actually come out with some digitalization requirements for trade and other aspects that will help to operationalize the single market. We are hoping that all of this will culminate into that harmonized payment system, but we are currently not there fully. And so what we leverage is this kind of bilateral agreements, which we seek to use to ease the pain of innovators as they move across the country. Sorry. Thank you.
Thank you, sir. Thank you for the answer. I don't know whether Mr. Asmini have a follow-up. You can feel free to ask question, but I think we should be okay. We also have another question that is also to the Bank of Ghana, mainly is from Mr. Edmond from home. Yes.
I think there's a last aspect to this question is like if organization is not in place, you find migration of risk from one environment to the other. Just a few points on that. So our frameworks are all often based on certain international provisions. For instance, in terms of EML CFT, you have FATF, and for fintechs, for instance, you are having to deal with FATF with 16 and some of these. I think there's a guideline concerning AML risks in financial inclusion. So because all jurisdictions leverage these international frameworks, you often find some form of harmonization when it comes to the key risks and the control environment. Thank you.
I think we'll take some few more questions, and this one has to do with Mr. Edmond Frempong. He wants to know, as an internal auditor of a fintech company, what are some of the key areas of interest to me in respect of Bank of Ghana regulatory requirements? I don't know if you want to take that, but I think from all the presentations that we've had, they've actually highlighted some of the key regulatory requirements, the compliance challenges, and all of that. So I think once you go through the guidelines, you should be able to unravel some of the regulatory requirement that is expected for the company, and as an internal auditor, you can make sure that they comply with those guidelines. Yeah. The other question has to do with, this one is to Mr. Oyeniran from the Nigeria perspective. He's asking that as a fintech founder in Nigeria, I noticed that most fintech companies are not willing to provide credit to small business owners. I own and manage a platform that connects borrowers to lenders, and most lenders I work with are unwilling to provide credit to small business owners. Why do you think this is so, and what can be done about this? Okay.
Okay, so this, to quote a legal term, calls for speculation, because I haven't done any rigorous analysis. But let's go back to first principles. Lovely, you are a fintech founder. But the one thing that you'll come to recognize about most fintechs is that their focus tends to be more of retail and B2B. What do I mean? They are a mass market, either they are a mass market product dealing with identifiable people that can transact high volume, low value, or otherwise, or they connect different business platforms together for a secure exchange. And the focus, like I said, like 40% of the business is fintech is payments, because that's just taking money from one place to another and collecting some margin on it. The lenders are not that many to start with. So what the lenders tend to focus on is the assurance of collecting their funds, and they need a lot of analysis of individual patterns of behavior to do that. I don't think that a lot of them are geared toward doing that kind of rigorous analysis for businesses. Banks are much more oriented towards that kind of risk assessment and being able to put in the right safeguards in place as far as dealing with the corporate entity. Fintechs are digital first, and so a lot of them are digital only. The kind of assessment you need to do for a corporate is difficult to do just digitally. So I think that's probably the reason why they tend to shy away from small businesses. They would rather lend personally to the business owner of a small business than to the business itself, because they can analyze the owner's behavior. But the business behavior is not as transparent in terms of being able to analyze. So that's probably why they may not be as willing, because they didn't design their business model that way. That, of course, leaves an open space for a new fintech player to come up and say, hey, I have a platform that can onboard businesses, and I can facilitate, the right value exchange with businesses. I have a friend that had a supply chain platform that she was working on that would help with that kind of problem you are describing. And the way it manages its risk is by managing the working capital of the business. So it doesn't just give out the loan. It disburses the loan to a secured platform. That's the concept. And then any purchases that need to be made by the business are made by the platform. So there's no possibility of diversion of funds. And also the payments also come back to that platform. So that was the idea of it. But it's been a few years, and that platform has not yet seen the light of day. But it's those kind of concerns, I think, that has led to the hesitance of fintechs to jump into that space. Much larger loans need to be given and much higher risk. So, I mean, why should I do that if I can get a lot of value out of smaller, high volume of players? That's just that's just what I think. But again, speculation.
Okay, thank you, sir. I think that was great. I have another question here that is also asking, this one is to Mr. Hayford Kuma. It's saying that the focus on AFC FTA is key for this one Africa that we are all yearning together. How is Ghana working towards a seamless money movement across Africa?
All right. Thanks for that. Of course, it's a key question when it comes to enabling trade. Trade has to, along with trade, must be payments, right? And so I mentioned the PAPS Pan-African Payments and Settlement System, which Ghana has also subscribed to. And beyond the banking sector, we are actually in the piloting phase for the fintechs. So there's a product for, I can't mention the name because it's just one entity, on Africa, a fintech that is currently piloting the PAPS as a fintech, although the banks are already connected. And so our acceptance of the PAPS model, the current work that we have ongoing in terms of the virtual assets area, the 3i Africa Summit that we organized in 2024 as a regulator, bringing innovators, bringing the international community as well as our own brothers who are other regulators together into the same room where we had a capital meets policy dialogue to discuss the way forward on sort of trying to harmonize regulations and allow the free flow of funds across borders shows our commitment. And Seneca, let me just say that the efforts that's been made this year shows that we are really minded to enable the digital space to drive these processes. Finally, just to say there's a work stream involving the digital payments aspects of the AFCFTA framework. You know, they have like 10 principles or so. There's one on the digital payment side. We feed into that work stream as well. So we are very much committed to it. Thank you.
Okay, thank you, Mr. Hayford Kuma. Gradually, we'll move to a seamless money system, and even with the introduction of the ECD, both in Ghana and Nigeria, we'll stop using the hard currency. I would like to open it up to a few people who have raised up their hands. Madam Ruby Sinam Nuto to ask her question, and then we'll move to Mr. Samuel Ofe. Madam Ruby, please, can you hear us? Okay, it looks like she can't hear us. Mr. Samuel Fair, please, would you want to go ahead with your question? Yeah, they can't mute. Benjamin, please, would you like to unmute them? Maybe they are not able to unmute. Okay. Okay, so I think we have one last question here. It's from an anonymous attendee. He's asking, considering that a large part of the digital finance system runs on telecom infrastructure, what role does the National Communication Authority play in ensuring, one, the security of this telecom infrastructure, coordination between telecom operators, and protection against telecom-related vulnerabilities such as the SIM fraud, S7 attacks, or network outages? So, Mr. Kuma, please, are you able to help us or any of our panelists? I think it's more to NCA.
You're right. The question is more to NC as the anonymous attendee rightly identified. I can only share that we have a working stream with the NCA where
Okay.
the ITU has this digital financial services security lab, which they use to help regulators across the various countries to deal with these key risks that has been identified by the attendee. And so what has happened is that the NCA has formed a working group together with the Bank of Ghana and the NIA and to work together on this project, which is seeking to leverage the NIA database as well as the security components requirements that they have of the telco players, as well as our own requirements of our fintech players to develop basically to develop a system where we'll be able to trace the fraud, and then also be able to strengthen security within the ecosystem. So that's an ongoing project, but further details on it may be best received from the NTA. Thank you.
Thank you, sir. Thank you. Anonymous attendee, feel free to send Deloitte an email, and we'll be more than happy to also add on if necessary. Yes. We are almost getting to the end of the webinar. We have our last presentation from Mr. Richard Omari, an Associate Director with Deloitte, to give us our last presentation, and then we will call it a day.
Okay, thank you very much, Dorcas, and it's been very, very insightful. Personally, I have learned a lot this morning when it comes to the fintech industry, and I'm looking forward to more. I think I don't have much of a presentation, but it's and it's in connection to what Hayford just said as to what is going to unfold in the future and what Deloitte is planning for the fintech industry, such that we are updated and then we get to know what is upcoming. So, what we are planning from our side, Deloitte, is that for you attending this webinar, it means that we have to keep you updated. And so, in the next coming year, 2026, each quarter, we are going to make sure that we give you updates. So, we are going to give you a more deep dive into the fintech industry, give you what the auditors are also looking out for, how you can leverage on AI to make sure the fintech business is also efficient. And then we also look into the future come 2027 and beyond. And so please, it's good you have joined us this morning, and we look forward that come next year, we will continue to keep you updated. Please don't be left behind. In fact, when the session was ongoing, I was just thinking about those times when people have to rush to the bank, queue, and then withdraw money or maybe make deposits. Now, all those era has changed. So the question is, what is going to happen in the future? More evolutions, more things are coming, and it's also going to come with a lot of regulations. We will keep you updated. So please stay tuned, be with us, watch this space. We will send you a lot of information, give you more updates, and we'll call you back for other webinars come next year. And that is what we have for you. Thank you so much for joining us this morning, and we look forward to meeting you again next year. Dorcas, I hand over to you again. Thank you very much for having me.
Yes. Thank you, Mr. Omari. You've said it all. We just want to say a very big thank you to our panelists for making the time today and all the efforts put in making the webinar a success. We also want to thank our participants for joining today. Without them, we wouldn't have had any webinar today. We hope they all enjoyed the discussions, and Deloitte's door is open for any further questions that they might have. Do enjoy the rest of the day, and we wish you a December to remember. Thank you all. Bye. Bye, everyone.
Bye.
Thank you.
You never know how far one idea will go and who it will impact. Like her family, their community, our planet. At Deloitte, we measure ideas by the impact they'll have. Because why work so hard to find solutions if it doesn't make a difference in people's lives? Why connect, or innovate, or engineer anything, if not to make an impact that actually matters? No matter who you are, where you are, or where you're going, Deloitte is there, and even there. We are dedicated to helping people and organizations solve problems, to know faster, to grow farther, to go from red to black to green, creating impact where it matters most.
Fintech is changing the financial services landscape. This transformation is gathering pace and is redefining traditional business models and customer relationships across our entire industry. No business model will remain unimpacted by this change. But where some see disruption and risk, we see opportunity. Opportunity for growth, product innovation, and, critically, for collaboration between the incumbents and startups. Two worlds that can work together to achieve mutual benefit. This is especially true here in the UK, as highlighted by our latest report. Connecting Global Fintech, created for the Global Fintech Hubs Federation. It recognises the UK as a world-class fintech hub. As the leading advisor to the financial services industry, our role at Deloitte is crucial. We're supporting the development of startups and enabling financial institutions to adapt to and benefit from the innovations and technologies that these new disruptors bring. As a global business, we understand international markets. To bring the smartest ideas and brightest talent to our clients, we've developed a global network of fintech capabilities known as the Grid. When clients plug into Deloitte's Grid, their access to expertise expands exponentially. It spans industries, geographies, and technologies, helping them to understand disruption and harness more opportunities. Collaboration is key to making the most of the opportunity that fintech presents, which is why we've developed Upside, a game-changing acceleration program built with the industry leader 500 startups. It rewrites the rule of engagement between incumbents and startups. It builds capabilities where they are lacking, and it draws on a global pool of fintech knowledge, innovation and networks to create scalable proof of concepts that solve real-world business problems. The benefits go beyond what we can do for our clients. At Deloitte, we see the value that the fintech ecosystem offers to industry and our wider society. That's why we're influencing and growing the fintech ecosystem as it roots through partnerships with Innovate Finance, the City UK, Scottish Financial Enterprise and the Global Fintech Hub Federation. We fully recognise there's risk and opportunity in the impact of all these changes. By combining our deep market knowledge with our strong fintech relationships, we're helping all parties realise their full potential. That way, there's an upside for everyone. Find out more at deloitte.co.uk/fintech.
The digital revolution is here, and it's changing everything. Businesses, economies, societies, and the finance profession. Artificial intelligence, blockchain, and predictive analytics are making finance more efficient and changing how it provides insight as a valued business partner. More and more businesses are starting to invest in new digital finance initiatives, but the sheer pace of digital change has left finance professionals struggling to keep up with the knowledge they need to execute them. This is what we want to change. Through our new online learning experience, FinLearn, we're helping finance professionals to quickly and easily get to grips with the trends and technologies transforming their world of work. Designed by Deloitte, shaped by our real-life client experience, putting practical knowledge at your fingertips. Through videos, animations, and interactive exercises, you'll learn how the role, skills, and capabilities of finance are changing. You'll assess new opportunities, and you'll understand the next steps to get started. The digital revolution is here. Visit deloitte.co.uk/FinLearn.
This is Deloitte Ghana. By building on Deloitte core purpose of making an impact that matters, we are a leader in professional services in Ghana. Across many Ghanaian professional services firms, our identity can be traced as far back as 1947. For the first time, here is our story. Meet some of the people who started it all. In 1939, James Donald Barnes, a Scottish chartered accountant, arrived in Gold Coast as an internal auditor of a United Africa company. This was an era where there were very few qualified accountants in the country, with most of the pioneering accountants in West Africa being foreigners. Our story in Ghana began on 1st January 1947. J.D. Barnes opened his office under the name J.D. Barnes & Co. Chartered Accountant. In 1954, Mr. Banks spearheaded the formation of the first registered professional accounting body in British West Africa, the Association of Accountants in the Gold Coast, which will evolve into the Institute of Chartered Accountants, Ghana, in 1963. Focused on making more impact, Mr. Banks made strategic mergers between 1955 and 1972 that changed the name of the firm from Migley Snelling, Barnes & Co. to Hammond Banner Migley, Snelling, Barnes & Co. Then later Deloitte & Co. And in 1972 Deloitte Haskins and Sales. In 1978, J.D. Barnes, as a true innovator and a contributor to society, spearheaded the formation of the Ghana Institute of Taxation as a professional body to train tax professionals in the country. In 1979, the office relocated from the third floor of Cocoa House to Ibis Court, 4th Liberation Road, Accra, Ghana. This will go on to become our office location for more than 40 years. After more than 30 years of service and dedication to the Ghanaian firm in 1980, J.D. Barnes was succeeded by Joseph Kobina Forson after his retirement from professional work. J.K. Forson, the first Ghanaian managing partner, led the Institute of Chartered Accountants Ghana as president from 1982 to 1984. In 1991, Cecilia Nyan was appointed as a partner and became the first female partner in the Big Four accounting firms in Ghana. She later became the president of the Institute of Chartered Accountants Ghana from 2008 to 2010. Deloitte Ghana has contributed to 3 presidents of the ICAG since their inception. Later that year, under the leadership of J.K. Forson, Deloitte Haskins and Sales merged with Tete, Usher and partners who were representatives of Touche Ross International to form Deloitte and Touche Ghana. In 1992, Dr. Pakwasi Indum, a partner of Touche Ross Milwaukee office, USA, relocated to Ghana to help establish Deloitte and Touche West Africa Consulting Division. He later became a renowned politician in Ghana. In 2002, after 20 years of outstanding leadership, J.K. Forson retired as a managing partner to become chairman of Deloitte Ghana. Seth Chade succeeded him and led the firm from 2002 to 2008 as a managing partner. He is credited with the setting up of the tax and regulatory service line of the firm. In 2003, Deloitte became the first singles global brand with a green dot punctuating Deloitte's new wordmark logo. From 2008 to 2017, Deloitte Ghana was under the leadership of Felix Nanasaki and Andrew Opuni Ampong. In 2009, the green dot was introduced as a call symbol of our global brand, representing all we do in the world instantly. In 2016, Deloitte's logo was rebranded with Deloitte written in black color instead of the earlier blue. In 2017, Charles Labi Odam was appointed country managing partner. Under his leadership, we moved from Ibis Court, 4th Liberation Road, to our present location, the Deloitte Place, plot number 71 off George Walker Bush Highway, North Jolu. In 2018, Deloitte Ghana became part of a large and stronger member firm by joining Deloitte Nigeria to form Deloitte West Africa. Soon after, we became part of Deloitte Africa, reinforcing our position as a leading force in our global organization. In 2020, Daniel Kojo Owusu was appointed country managing partner of the firm. Under his leadership, our ambition is to be the leading professional service firm in Ghana. 2022 marked 75 years of making an impact that matters in Ghana. What started as one person with an idea has grown to the firm we know today. We have been in business for 75 years because people trust us. While we count our successes and milestones, we acknowledge that we could not have done it without our founders, alumni, partners, staff, and clients. Our history shows the kind of impact we can make as individuals and collectively. Today, we are creating our future legacy together. What will your impact be?